Okay, let's unpack this. Welcome to the deep dive. We're here to cut through the noise, give you the key nuggets of knowledge. Today, we are diving deep into a real giant in India's financial world. Life Insurance Corporation of India, LIC. We've got research, financial reports, market data. Basically a shortcut so you're properly informed. Our mission, explore LIC's, unique history, its financial health right now, and maybe uncover its surprising true value. So starting off this deep dive, what's the first thing that really grabs you about LIC?
Well, for me, it's definitely the origin story. It's fascinating. LIC wasn't just set up in 1956. It was actually born from nationalizing 245 private insurers.
245? Wow, why such a dramatic move?
Well, a big part of it actually was worry about insurance fraud back then. Widespread concern. And sort of ironically, nationalizing everything created this deep public trust in the new government entity.
Right, so trust built right out of tackling a crisis. That's powerful.
Exactly. And this history gave LIC this dual mandate, you see, not just profit.
Ah, okay. So profit and
social welfare, a responsibility to the public good, which, can create some strategic tensions down the line.
I can imagine. And speaking of its sheer scale, the research mentions this incredible physical network.
Oh, absolutely unparalleled. Think about it. Over 2,000 computerized branches.
Okay.
And then something like 1.5 lakh individual agents. That's 150,000 people on the ground.
That sounds like a massive competitive barrier, doesn't it? Just the reach alone.
It absolutely is. A huge moat, really, in the Indian market. But let's switch gears a bit. Let's talk financials, because there are some, surprises there.
Okay, financials. I know they have a reputation for being conservative investors.
They do. Very conservative. They're actually required to put at least 75% of their funds into government securities. It's safety.
Right. Makes sense for an insurer. You want that stability. But then the research flags some significant market volatility impacting them. How does that square up?
Yeah, that's the interesting part. Despite being conservative overall, their sheer size, the huge assets under management, their AUM meant they recently faced a, paper loss of around 84,247 crore.
84,000 crore. On paper, you said.
Yeah, a mark-to-market loss. Basically, the value of their equity investments dropped significantly on paper during market corrections, even though they hadn't sold, largely due to some concentrated holdings.
Wow, okay. That's a huge number, even on paper, it makes you think. But then the research also shows this dramatic jump in their profit after tax, the PAT, right after their IPO. What's going on there? Is that pure growth?
Good question. Because, no. That jump in PA wasn't all organic business growth, not by a long shot. A really substantial chunk of that improvement came from accounting reclassification.
Accounting magic.
Sort of. Post-listing, they moved a large amount of funds from what's called the policyholder's surplus of money set aside for future claims over to the shareholder's account.
Oh.
So boom, reported profits for shareholders look way better.
Okay, so a boost, but not necessarily from selling more policies or investing better.
Exactly. And what's also telling is that while profits jumped on paper, their actual market share for new business, it's reportedly dropped down to around 59%.
59%. So competition is heating up then.
Definitely. Those private players are getting more aggressive, more agile.
So a big paper loss on one side, a profit jump fueled by accounting on the other. Quite the picture. This brings us to that Benjamin Graham valuation idea you mentioned, buying $1 for 50 cents. How does that apply here?
Precisely. Graham's whole thing was finding the intrinsic value, the underlying worth of a company. And when you apply his kind of formula to LIC, with its current share price around, say, 923, the calculated intrinsic value is way higher.
How much higher are we talking?
Well, the range is quite wide depending on how optimistic you are, but calculations suggest somewhere between €17.55 and maybe even €2,987 per share.
Whoa, so compared to the 923 price?
It suggests the stock could be significantly undervalued. You're looking at potentially a huge margin of safety, as Graham called it, maybe a 47% to 69% discount to its calculated value.
That's a massive potential gap. And I guess that government backing adds another layer of perceived safety too, right?
It absolutely does. That sovereign guarantee is a unique factor for LIC. So, summing up the pros. India's biggest insurer, world's third strongest insurance brand. That guarantee. A decent dividend yield, about 1.30%.
And they're not just standing still. Are they digital transformation?
Right. They've got initiatives like Project DIVE for digital stuff. And they're looking to diversify more into health insurance, too.
Okay, sounds positive. But what about the downsides, the cons?
Well, as we said, intense competition from nimbler private firms. That's a big one. Its sheer size and traditional structure could mean slower innovation. Bureaucracy, perhaps.
And the government influence, can that slow things down too?
Potentially, yes. Government priorities might not always align perfectly with pure market agility. And that massive AUM we talked about, it means they'll always be exposed to market swings, like that big mark-to-market loss showed.
Makes sense. But one thing the research apparently highlighted, no major financial scandals recently.
That's a crucial point. For an entity this huge, operating for so long, the research noted a clean slate regarding major financial scandals in the last decade. That really reinforces that public trust aspect we started with.
Okay. So we've dug into LIC, unique history built on trust, that dual mandate of profit and social good, some financial complexities, stiff competition, and yet this fascinating possibility that it's significantly undervalued according to classic metrics. It leaves you thinking, doesn't it? This blend of deep trust, government entanglement, and potential hidden value. What does that really mean for the future of these kinds of massive state-influenced entities in a market that's changing so fast? Something for you to keep exploring.